Mark Espy once again with MarketTamer.com. Must remind everybody again, this is just for educational purposes only, not to be construed as a recommendation to buy or sell anything. Well, the Compq a little bit different than the other two indexes in that it had a little bit further to come to penetrate back below the simple 200 moving average. It was quite a bit higher above that average than the other two indexes. Yet it happened to accomplish just that and break back through the 200 simple moving average. It had a similar pattern here in that it came to the top of this predetermined channel that we had spoken about before in prior analysis, and it came up and challenged this area at the top, and in fact this swing high right here at about 2300, and that's where it started going sideways with some very indecisive trading. And we put in I believe this was last Thursday, this was a hanging man, and that was fairly telling that it probably was not going to go much higher. And then I put in a Doji on Friday, which was very indecisive. And lo and behold, on Monday, a huge bearish engulfing pattern. It gapped up very significantly and traded down and engulfed not just Friday, but also it almost engulfed the prior 2 days to that. Continued down with continuation trading and then back below the 200 simple moving average. Today it put in a Doji, and it's actually a bullish Harami, okay, which is it's a bullish 2-day candlestick pattern, which does require some confirmation. So we would want to see, if we wanted this to go back up, we would want to see it gapping up and trade up. If it does that, it's going to have to contend once again with the 200 simple moving average, but it doesn't appear as though it's oscillating. It doesn't appear as though that it's been much resistance and or support either way, but it's acting sort of like a magnet because it's oscillating around the 200 on both sides of it. Today's action was put on pretty significant volume. So again, I'm going to look at the bottom here as an area or a support area that could provide some decent support going forward. And today's low was 2206. So let's pay attention to that because that might be a significant low going forward. We have this double bottom that was put in back here in late May and mid-June, and that was at 2140, and that needs to be reckoned with. And then we have the February 5th low, which is at 2100. If it does break up back up above the 200, then we need to look at this swing high that was put in at 2341. We also have this swing high, actually this gap right here rather, and it coincides with a shelf back here from March, and that's at 2375. And then we have this area just above 24, about 2430, and then the top April 26th at 2535. Okay, looking at the stochastics, again, just similar to the other two indexes in that we had a crossover, fell down out of the overbought area, back down through 80. It looks like it's still going, and then we have the histogram moving back toward the zero line. It looks like we might have a crossover here on the %K over the %D line. So my best feel is this, in fact, today could be some support to be reckoned with, and we could be moving into a narrower channel here. It doesn't look to me like the 200 is acting as too much of a resistance either way, so I would probably be looking at this area here from about 2200, 22 and change up to about 2341 as a channel right for now. Okay, the other thing I wanted to mention to you is I had suggested that the volatility would drop off in the market, and it did exactly that, and it came down to around 23 or 24 on the VIX, yet it's popped up back up here recently, and it's about 28.5, I think, right now. So I'm thinking that we're going to have a little bit more sanity in the markets in terms of the volatility, but we shall see. I do suggest that you trade hedged. Make sure you pay attention to risk and position sizing and diversification, and I wish you the best of trading in the upcoming week. Look forward to talking to you next week.